Welcome everybody at TiE Inflect. My name is Madhu Iyer. I'm going to be moderating this panel, as you just heard from Niharika. Thank you, Niharika, for that lovely introduction. One of the hotbeds of growth in the global economy in financial, is financial technology. Differences in new payment systems, business systems, changing, it's changing everything about how we really interact with money and how we pay each other. And we have a wonderful panel here today, to explore how we are driving that. I want to call upon the panel, Ashish Kapur, Ashwini Kumar, and Amar Singh Rathor. Ravi can't be here today. He had something on personally, so he couldn't be on the stage. So Ashish, nice to see you.
Hello.
Ashwini and Amar. Want to introduce them. Ashish is on my right is the head of shared solutions delivery at the Bank of the West, part of the BNP Paribas group, and brings over 20 years of experience in providing technology solutions to banks. In his current role at the Bank of the West, he oversees data analytics, robotic process automation, business process management, and CRM solutions across the enterprise. Ashwini is the head of Infosys relationships for West Coast in financial services domain, and he brings over about 25 years of strong technology acumen with extensive experience in banking management. In his previous life, he's led retail and operations for banks. He's been around in the banking sector for a while. Last but not least, Amar leads Standard Chartered Bank's Innovation Lab here in San Francisco. His role focuses on identifying key technologies and emerging trends. He has vast amounts of experience in global international banking and consulting experience, and apart from Standard Chartered, he has led transformational projects at Credit Suisse, Accenture, and GE. Welcome everybody. One of the things you'll notice about this panel is how many people these companies and technologies really touch. And FinTech is a sector that's moving so quickly. So jumping right in, Amar, I wanted to start with you, since you're at the innovation labs at StanChart and must be seeing startups habitually. There's important trends in banking industry, and there's been some that have been mainstays. And one of the mainstays of that trend is the use of big data, AI, advanced analytics, and cognitive computing. Where do you see the biggest applications of AI and the rest of these?
Mm-hmm. So, thanks. There are two areas that the banks have been, very well versed with from a big data perspective for a long time. One is in the financial markets portfolio management space, where we always had large amounts of data and have tried to figure out risk and portfolio strategies. And the second area that has grown more in the last decade, I would say, is financial crime compliance. Identifying anomalies in very large volumes of payment transactions to target and stop bad actors in the payments ecosystem.
So risk mitigation.
Yes. So those are the two big areas, but those were there because there was enough data in one place with a specific problem, and the technologies or part of the sciences that were there were able to address that with that large volumes of data. It was also very quantitative kind of data, not so much of unstructured data as we have in other parts. And that's been the big turn in use of new tools, right? We've got more unstructured data, we've got more silos of data. So some data sits in your mobile app. Some data is sitting in a banking system, some data is sitting on a card system, some data is sitting externally to the organization. And bringing that together to solve bigger problems was not something that the banks did for a long time. But over the last few years, at least we've built a data lake, put the data together, started building the stack on top of that, then essentially democratizing advanced data analytics, as I call it, simply, not AI or anything, and making it available to the users without having the need to write a ton of code or have advanced mathematics degrees. Right? That's our view.
So, Ashwini, from from your perspective, how do you see AI changing the banking industry?
Yeah. So, as Amar was saying, there is from an adoption perspective, right? So every bank is definitely looking at AI as an option, right? And however, the biggest challenge is, of course, the data itself. So if you really see today, the banks are investing into creating the data lakes. And I would say it's about 3 years down the line, that's when you would see more advanced analytics being used from a use case perspective. So today, if you see, there are, as you said, around the frauds and risk management areas is where they are investing, but that would expand as they get the data into a particular platform, which is what they are investing today.
So this is interesting because we've spoken about like risk and really the volume of data, but then there is a lot more in commercial banking that you might be seeing, Ashish, which is the front end, the customer journey. Would you be able to speak a little bit about that with the robotic process automation? That's part of AI as well, and how you see that more on the front side.
Sure, I'll take a swing at it. Commercial banking, and I'll just preface this with the comment that I'm a technologist, but certainly in the business of providing the solutions to our commercial banking customers. So commercial banking as a line of business is going through some significant change. If you're to believe McKinsey and the like, by 2030, up to about 30 trillion worth of value in that ecosystem is up for disruption. And I think the 4 things that commercial banks need to do soon in order to maintain and manage their return on equity, which has been somewhat suffering over the last 5 years or so. First, I think they need to have a differentiated multi-channel experience. Second, I think the product offerings and solutions that they need to provide need to be more innovative than they are today. Mm-hmm. Third, I think they need to look at digitization front to back, and this is where I think embedding the customer journey type of thinking front to back will help them navigate. And fourth, I just think that they need, and we in banking need leadership in terms of both thought leadership and new skills in this space to manage the risk, to take the risk in some cases, be more innovative in both how we think through problems and how we organize to solve the problems.
Nice. I picked up a couple threads here in everybody's response, and innovation is definitely on top of mind. I want to sort of, ask one more question, and we'll switch to the innovation part of it. What comes to mind is that banking as an industry has had, you still call it advanced analytics, and that's absolutely okay, because I believe that, machine learning is also not AI, but it's pretty powerful. I want to, ask you about really the front to back and the digitization. What is, how much of it is sort of driven by AI, the digitization journey from front to back? if you can sort of go from this side. Or Amar, if you can start.
Okay. I think we're in the data business, right? Money and digital interactions are data, right? So a lot is driven by, so right from who are you targeting, how are you targeting them? It's data,
marketing
right?
Analytics.
Yes, marketing analytics.
Yep.
From there you move on to onboarding and acquisition, right? If you digitally onboard and acquire a customer, you're trying to capture and you use data, use rules on those data. Once you have that customer, what kind of offers are you giving them in their context at the time of need? So
personalization.
Personalization. So if you think of data, the velocity comes in, the voracity comes in to personalize in time, and so use of against advanced analytics, so data science tools, whether it's simple regression to a little bit of vector algebra. A lot of supervised learning tools is what we've become, I would say, fairly good at. I'm using good a little loosely, but fairly good at. Using more advanced unsupervised optimization methods to, find a needle in a haystack, maybe not there yet as much, or that's.
So from a digitization perspective, I would put it into 4 buckets. The first one I would say is the customer experience. The second one is the customer insights. And then you have accelerate and assure. So most of the investments that we see today from a fintech perspective is all in the customer experience area. It's not that it's not in the other areas. Come to that. So the fintechs are targeting basically, I would say, low-hanging fruits, basically the fee business. So I would see that it would expand to the customer onboarding and servicing areas in the near future, right? So that's one aspect from a digitization perspective. The second is around the customer insights, which we just talked about, the AI and machine learning and those aspects. So getting into getting insights into customer, providing a personalized offers and target the right client using the AI ML is something that's going to grow in the near future. And the assure part of it. So as the banks mature from digitization perspective, the risks are increasing. So obviously, with the risk increasing, so there is a lot of investments coming from a cybersecurity perspective. So the assurance part of that would come from there. So we would definitely. So it's not that we don't see the investments there, but we see that the banks would definitely want to invest more in the cybersecurity, considering the amount of investments that they are doing in the digitization.
I'm going to try to go back to the core question to make sure that I'm addressing the point. Was the question in and around how do we view digitization? Okay. Well, so banking is kind of old school, and I think of the technology investments or innovation in digitization being somewhat of a bimodal sort of approach, to use or borrow Gartner's phrase. So we like to digitize on the periphery, the websites, the apps, the channels, and the like. But when it comes to the core systems, some of the banks, a lot of the banks have core systems that haven't been sort of transformed, replaced, upgraded, uplifted in some 30 plus years. So at the core, we have mainframes that are still driving the core processes. So if you take that literally, and you say we want to be a digital enterprise, then you've got to start from the core. And that's a very ambitious undertaking. Not a lot of banks have the appetite to replace the core systems. It's not a true customer differentiator. It's an expensive proposition, and it's certainly not gonna, let's just say, engender career growth and advancement. So it's a tough one for the banks that have legacy infrastructure.
I mean, it's. I think that's a gamut of responses, which is reason why we are here discussing this, because there's a dichotomy of sorts. There's the mainframes, and then there's blockchain. And there is no financial services forum that would be complete without, sort of bringing up this, this revolution that's happening around, which is, there's something really funny going on, where in the financial industry, where traditionally, which is not a very collaborative industry, there's now the blockchain technology around a group of people that probably don't trust each other, but they have a standard. They've set a standard where they're collaborating now. And communicating via this technology. I don't know, there's a lot of experiments, and I'll let you guys speak to it, but the technology is something interesting. The use cases and such, we don't know yet. If you could, share your thoughts on blockchain in this industry that's kind of taking everybody by storm. And I'm not talking about, I'll let you decide whether you want to talk about cryptocurrencies or the smart contracts in the blocking, in the banking sector. But I leave that open, but it's, blockchain as an umbrella.
Yeah, so again, we're doing a bunch of things in the distributed ledger technology space, whether it's from cross-border payments to originating loans on a distributed ledger to supply chain finance, digitized supply chain finance and smart contracts on distributed ledger. All of it within something you said earlier as in a more of a collaborative space, not with the same trustlessness idea that came out originally from Bitcoin, the original blockchain, right? So, and this is my personal view, I think we are intermediaries, right? And so a lot of the solutions that we're building on this new technology in its early days are still with our lenses on in what we know to do best. The more interesting experiments would come from outside, I think, and it's for us to jump on them early on as we see them happen. I don't see us, creating a bankless future on a blockchain ourselves, right? But when we see it, we should jump on it. That's my view.
Interesting. So what we see is a broad spectrum from a blockchain perspective, right? So blockchain is definitely a future technology. It's not that it's not a fly-by-night operator that it's just here and next day it's not there, but it is going to be there. Now the question is how you use the blockchain is the point in discussion. So we have seen people doing blockchain using payments, and there is a other end where we have banks being established using blockchain as their core technology. Right, so there is a bank in UK which is it's kind of a startup type of thing, which it is going to cater to the unbanked sector in the world. So what they are looking at is to target the 2 billion people across the world who are unbanked, and that is their target. And they are creating a platform using blockchain today, and that I would say is the extreme use case from a blockchain perspective.
Okay, so I'm going to take the contrarian view here a little bit. I just think that in the first 10 years of a new technology, the technologists overestimate the impact it's going to have. And the next 10 years, I think the world underestimates the impact it's going to have. So I think we're in the first 10 years of the blockchain evolution. I frankly think that it needs to prove the scale. The concept I subscribe to, but I think it, in my humble opinion, it hasn't proven itself out in solving the problems at scale. Now, are we using it? Are we experimenting with it within the bank? For sure. There's n number of use cases within our treasury management group. My colleague talked about We call it cash without borders, trade financing, and the like. So there's n number of use cases that are being executed and validated. Not to say that the potential's not there, but you do some amount of work, and I don't claim to be an expert, but the folks that know this inside out have pointed out some limitations. Now, whether hash graph is the right answer or something else that will address those limitations, I think there's some distance it needs to cover before I would consider it a mature platform for the masses.
So what do you, that's just kind of dovetailing on that. I wanted to just ask you from a commercial banking standpoint, what do you think, there's been a lot of, consumer banking innovation that's been happening. What's the most transformational impact of FinTech and these kinds of emerging technologies that you see in commercial banking?
Transformational impact of FinTech and the like in commercial banking?
Yeah.
Okay, well, that's a good question. Transformational impact. Well, so it depends on your sort of understanding of transformational. So, commercial banking could, the mainstream understanding might be commercial banking is facilitating capital markets transactions, whether it's debt instruments, equity transactions, and the like on Wall Street. But a large part of commercial banking is just lending to large commercial banks, to large commercial clients, whether it's working capital or investments that they use. And I think in that space, it's still very much an old school business where when we loan $10 million or more to a commercial client, it's still, the 3 C's, the collateral, the capacity, and the capability to pay back that money. That's going to drive a decision to whether to lend the money or not.
Got it.
I think to go back to fintechs, if I had to give them credit for something that, in commercial banking, use of data science and algorithms to better understand and manage risk, whether it's at the point of origination with underwriting or on an ongoing basis, and to predict how we would withstand that economic stress in various hypothetical scenarios. That's probably an area which has benefited from some of this.
That's great. I think with risk, I'd like to sort of jump on to cybersecurity protocols. We all have vulnerability, and it's a topic. Well, I won't go into the data vulnerability aspects of things right now, but I want to keep this to cybersecurity protocols with RPAs, with all these cognitive technologies kicking in, and banking sort of inevitably intersecting with Internet of Things, with sort of like AI in devices and whatnot, and open APIs too, which all of us are privy to. That's presenting another risk. Just some broad thoughts on cybersecurity, if we can sort of start with you on the end there.
So I'll just, for a second, touch on the last one, impact.
Open API impact?
No, impact on transformational impact. Here's an example, like we're in emerging markets. Cost of acquiring a customer for a traditional banking scenario was quite high. We had a lot of unbanked, underbanked in our markets. Most recently, we've launched a mobile-only digital bank in a country in Africa, and brought down, so we don't need to build a physical branch infrastructure, behave like a traditional bank, go in like a fintech in a market.
I mean, I think it's an interesting point that you bring up, which is not for, in the scope of this discussion because of the time. But half of all the investor money is in emerging markets right now in fintech.
Yeah.
And that is, unlike anything else.
Yeah.
But yeah.
So that was a transformational impact that we're trying to have in the markets that we bank in. Coming to cybersecurity, I think it's a massive area, right? The way we see it, I think we'd say, prevention, detection, response, recovery, right? Across those four framework, four or five areas, we got to see, one, the exposure that we have across the endpoints is, just exploding with more devices, more channels, more APIs, etc. Right? The user base itself is changing, right? So, people with BYOD, bringing their own devices. Workforce is changing. People are working part-time, being freelancers. In our markets, we didn't always have this RIA kind of concept, but things are changing. So a very interesting space, very technical in many ways, but a lot of AI being used. One area that I've been looking into is GPU-powered visual analytics to do sort of security investigation. And how do you take something that would take an analyst like hours to do and actually automate that in real time within seconds to sort of, once you see something, some bad actors in the network, detect, take action immediately. That's just,
I think in the interest of time, I'm going to have some time for the for audience questions, but I want to sort of wrap up with my questioning with one last question for all of you. What business area in financial services do you think is ripe for disruption in the next couple years? Or if you want to take another question which might be interesting, you can answer both, either. Or what has been the biggest surprise for you in the last 2 years in the fintech sector? So either a area that's ripe for disruption, or what's really surprised you in the last 2 years?
So I'll just say that if I look at what's happening in China with Alibaba and Baidu and the like, the platform players will disrupt the financial services sector as we know it today. So whether it's offering loans, facilitating peer-to-peer payments, or offering new products, mutual funds and the like, investment products, to me, those platform players provide, or in my mind, they present the biggest existential threat to financial services. And the second part of your question was something about what surprised in the last...
you in the last 2 years, yeah.
What has surprised me in the last 2 years? It shouldn't be a surprise as much as just, when it hits you, it's like the aha. The post Equifax, post Facebook, post SunTrust, what have you, data breach of the day, the new data regulations, whether it's GDPR, etc. It's certainly become the privacy, confidentiality of the data, the cybersecurity crisis that we're facing, the security, privacy, confidentiality, that has become a much bigger deal. I think that fundamentally goes to the trust factor, and I think entities that lose that trust, whatever the case may be, are going to be out of business.
Ashwini.
I will take the first question, right? So what are the disruptors? So I would definitely want to see in next a decade or so where the banks collaborate and they have a shared services branches. So if the reason why I see that's something that's going to be in the future. I know Madhu just told a while back that getting them together on a platform is difficult, but considering that every bank is looking at reducing their cost, improving the efficiency, so technology is playing the role in improving the efficiency by introducing, say, robots. There are robo-advisors at the branches, so you don't need people there to advise. So as the conversational AI matures, right, so the robo-advisors role will also improve, right? So today Today it's not a bidirectional, it's a unidirectional. So I would say that would be the biggest disruptor, and the banks would want to do that, right? So because that's going to reduce their cost. And there is a set of, a sector there which loves to visit branches. They're more comfortable doing that than doing something online. So that's more because of the cybersecurity, I would say. So I would say sometime in the near future, I would want to definitely see that we have shared service branches across the banks.
Great. Amar.
Yeah. So quickly, I think platforms disrupting vertically integrated financial institutions, that's already the trend. So it started. How it plays out over the next 10 years will be interesting, but that's the direction. And I can elaborate a little bit on it as we're seeing Alibaba, Amazon enter. So the pieces of banking that would go away are the more rich pieces from a balance sheet perspective, fee incomes, and then that creates a scenario where you have a utility which provides basic accounting. So the financial infrastructure that you want to keep safe and secure stays in a bank. That's one threat. And if that happens, then there is a geographical sort of consolidation risk as well. So you don't need 10 or more utility companies in a market. So that's one risk. The other one was surprise. I think what surprised me was the pace, like at which the industry lines are blurring, and how these platform plays, the third, fourth order of effects are coming in. I think Gojek getting into financial services, Grab getting into financial services. So, what stops anybody here to start some form of a financial services? That barrier to entry is going away, and if you take a platform approach, it can be very interesting.
Yeah. I'm surprised nobody said the cryptocurrency, Bitcoin valuations and the price. I didn't invest. Damn. But anyway, it's.
I think that market will grow. So crypto is nascent.
There's still time for me. You're saying.
Yes,
thank you.
But there will be desks.
That's great. I just want to open up the in interest of time, audience questions. A couple of questions we can take. Yes. Is there a mic that's going around?
I think that's.
Oh, that's the mic, please.
Hi. So, can you hear me?
Yeah.
Okay. So it was just elaborating on the question about mobile payments and how you see that developing. When I say mobile payments, I mean use of mobile phones in, say, South Asia, Africa, as an alternative to the branch-based network. So do you see that as becoming a growing trend?
I think that in itself is one of the more transformative activities that has transpired in the last couple of years. I see that having a huge positive impact and growing. It's clear to me, just witnessing the growth of mobile payments in India, in China, and the like in the last few years, that is improving the money supply chain, reducing friction, making it much more efficient. I'm a huge believer.
Just to add to that, right? So not the Asia part, the Africa part. If people have visited Africa, you see that many places in Africa you don't. It's mostly cash transactions. They don't use credit cards. They don't use debit cards, so it's mostly a cash transaction. So that is where the mobile payment acceptance is going to be more in this area market.
Time for a couple more questions. I think one or two more. Yeah.
Banks are regulated industry, but one of the actually central bank comes in because sometimes they protect the banks. So outside, I suppose, what we have seen other industries coming in the FinTech, sometimes it is actually protected by the central bank. So what do you think should be the role of central bank in future?
role of
role of the central bank, suppose
role of central banks in regulations.
in regulation or in the industry, fintech industry, suppose sometime banks actually is protected, so they are they take comfort that they are protected from the others coming in the area.
So regulatory.
Yeah. So central bank plays a few roles, right? One is execution of monetary policy. One is governance for financial stability in the country, and as they play that role of ensuring there is financial stability, they set the rules for that, right? Now the rules can be adhered to in certain cases by non-banks in areas where you're not putting somebody's deposit as risk, and in ensuring data privacy and consumer protection from a financial stability perspective. So those are areas. So the rules are set. I don't think the central bank needs to change the rules. Yeah. Oh, so they need to be equally digitally savvy to keep enforcement up to speed in a digital world.
I think of the developments since the crisis. The central banks, frankly, haven't done a great job. If the problem that we were trying to solve was too big to fail, we have sort of gotten to the opposite end result. The big four banks today have 40% of the deposits. They've gained deposits from the regional and the community banks. The role needs to change. The central bank needs to be much more open to financial technology players, the FinTechs, and having been on the front line answering to the regulators, I think they're almost always fighting the last battle. So whether it's the mortgage crisis or the auto lending crisis or the student loan crisis, and I think the challenge is to anticipate the next crisis, which may be the cyber crisis, and really, sort of push the industry in that forward-looking direction. So I would hope that there would be more of new, fresh thinking in those lines going forward from the central banks.
Great. I think that's all we have time for. Thank you so much, everybody on the panel and the
Thank
audience.
you.